Hey folks, this is Joe with Palmetto Land Buyers, and today we're discussing the seller financing process and what you as a potential buyer need to know when you get into one of these agreements. Okay, so let's start off with defining seller financing. What is it exactly? Seller financing is an arrangement where the seller of a property provides financing to the buyer instead of the buyer getting a loan from a traditional lender. So the seller is basically playing the role of the bank. Okay. In this setup, the seller essentially acts as the lender, allowing for a more flexible and personalized financing solution. Okay. Because think about it. You go to Wells Fargo, you go to Bank of America, you can negotiate a little bit. You might be able to negotiate on the interest point, on origination fees, or on the points they charge you, but typically they're not budging. I've tried out for loans where even like mortgage brokers charge super crazy high percentages, and they a lot of times they don't budge because they've got all this overhead. They got the office, and they got the secretary, and they got this person and that person, and they're paying all these overhead costs that they really need a price gouge. So when you're talking about seller financing, they typically don't have any of that overhead, right? Especially if it's a one-off thing where the guy, a guy or lady is just selling their piece of property. They're way more flexible than a bank's ever going to be. Okay. So, what are some of the benefits of a seller financing? One major benefit is that it's easier to qualify compared to your traditional bank loans. Now, everybody who's going to do a seller financing deal, every deal is going to be unique, right? They're all going to be different. One person may check your credit, one person may want to check for your employment. Look, I can only talk about the deals that I've done. My strategy is I'm going to tell you, we're going to write up a contract. It's going to have the purchase price, it's going to have the monthly payment, it's going to have the down payment, it's going to have the interest rate, it's going to have everything on there, right? We're going to outline it. I got a contract that I use for seller financing. It's like 7-8 pages. There's a lot in it. Talks about who's maintaining the property, what you need to do when you want to sell it, who pays the taxes, who's paying for the insurance. There's a lot on there. My strategy when I'm working with folks is you look here are all the terms, and we're going to go over them. We're going to talk about them. You need to make a decision. I'm not going to check if you got a job. I'm not going to check how much you got paid. I don't want to see your pay stubs. I don't care. All right? You're an adult. You need to make the decision, and that's the strategy that I take. Look, here are all the terms. All right? We're going in this in good faith. Now, if you don't hold up your end of the obligation, then I'm going to enforce it. And same should come from you. If I don't hold up my end of the obligation, it should be enforced. And so that's a strategy that I take. Qualification process when you're doing like a seller financing deal with me is, can you make the payment? Do you feel like you can do it? And then we go for it. But everybody's different. Some people might want to check your credit score, and they might want to check your employment history and everything else that comes along with it. I'm just saying that, I typically don't. Another advantage is the potential for a faster closing. There's fewer formalities and approvals that are required when doing these deals. I would say, a lot of that depends on how it's structured, right? If we're going to do the type of seller financing deal where the deed's going under your name and I'm going to carry a promissory note, then the closing process will probably be, faster than traditional, but pretty close. Maybe the same. Now, if we're doing a land contract where the deed's staying under my name, but we're recording the land contract, that could be done much faster, right? Because we'll probably just get an abstract, we'll probably just get a title search done and have the attorney look over the contract, get it notarized, and then record it at the county, right? And then once it's recorded at the county, that acts as that would be like a lien against the property, right? That contract being recorded at the county basically stops me from selling it to someone else, right? Because when every time you go to sell property, especially here in South Carolina, I don't know about anywhere else in South Carolina, when you sell real estate, you need to use an attorney, and that attorney will hire a title abstractor who goes out there and does research just to make sure there are no liens, no encumbrances, there are no mortgages on the property. So when an abstractor would go to the county and pull all this information about the property, our contract, that land contract, would be registered in the county and would prevent it from being sold. So you always want to get something in the county that shows that you've got this interest in the property. All right, but for the final benefit here, the third one, seller financing also offers flexibility in terms and conditions, which can be tailored to fit both the buyer and the seller's needs. And that's just true. When you're doing these deals, you've got a lot of wiggle room as far as, hey, how much you want to pay a month, how much you want to do a down payment, what do you want for interest rate. All of this is up for grabs, right? It's a give and a take. So let's say I'm on the sell side and you're on the buy side, and I say, look, I want $10,000 down, I want $1,000 a month, and the purchase price is $100,000. You might say, look, I don't want to do that. I want to reduce my payment. How about I do 15,000 down, or I do 20,000 down? I'll do 20% down, $20,000 down, and we reduce the monthly payment to 500. Then it's up to me as a seller to say, okay, well, does that work for me, right? And if it doesn't, then I might come back with a counter offer. But there's this back and forth that needs to happen, which typically when you're dealing, like, look, when you're dealing with Bank of America, Wells Fargo, they're not going to have that flexibility. They're more of a it's my way or the highway type of organization. But when you're doing seller financing, you're working with a decision maker, right? These banks, you're not working with a decision maker. You're working with a low-level banker who's just following policy. So it's a lot different. It's a lot different. You can get a lot more done this way. All right, here are the key components of a seller financing agreement. So the first one is the promissory note. This can or cannot, this may be part of the deal. It may not be, right? It all depends on how the seller financing deal is structured. The promissory note is like a mortgage, right? It gets registered at the county and basically says that you're going to pay me X amount of dollars because I sold you the house or I sold you this piece of land. Okay. So it is basically a lien against the property. It's not always recorded because if you do the land contract version of this, promissory notes never recorded. Instead, the land contract's recorded. All right. The interest rate is going to be a key component of the contract. It should be stated in there. It cannot be a secret. For all transparency, I put it in bold in my contracts. This is the interest rate. I put it in bold. 10%, 5%, 9%, whatever it is. So you want to make sure that's there. I would also say if you're on the sell side, if you're preparing these land contracts, there's software out there where you can plug in the numbers and get an entire balance, right? It got all the itemized, from the first payment to the last payment. I'd get that payment schedule and make that part of the contract as well. All right, typical repayment terms, these can vary, but they usually include monthly payments over a set period of time. So the repayment terms, the way I do it on my contract is I'll do, hey, this is a $200 payment due every month, beginning January 1st, 2024, ending, August 1st, 2028, or whatever it is, right? So, and like I said, if you have a schedule of payments, that should also reflect accordingly. A balloon payment, this could be made part of the agreement. I've never done it. Now, I've received balloon payments on my land contracts, but they weren't part of the contract. So the way it works out with a land contract, which in my opinion is the easiest way to do a seller financing deal, I if you buy the property from me and I'm the seller providing you the finance, you have access to the property from day one. It's your property, right? You do whatever you want with it. That includes selling. You just got to give me notification, let me know it's being sold. But yeah, you sell it. And when you sell it, the balance is paid. So the balance being paid can be similar to a balloon payment in that it's large, but sometimes I've heard of seller financing deals where you've got maybe a low down payment, very little entry costs. Maybe $1,000 down payment, $100 monthly payment, but at the end of the fifth year, you got to pay $90,000, right? So that could be a possibility. And then speaking of the down payment, that is also part of these contracts. And the down payment typically on a seller financing deal is going to be less than what you would have to do with a traditional mortgage as well. Traditional mortgage, conventional at least is 20%. If you do like a FHA, I think it's 5% down payment. There's probably programs where you could do 3%. Um, but with the seller financing deal, again, it really just comes down to the negotiation and just having good, clean, and clear conversation between the buyer and the seller. That down payment can be brought down significantly. You just need to have a conversation. Hey, let's just talk. It just needs to be like, hey, let's talk about what works for you. And that's one thing that I do with my sellers is, hey, I want to set you up for success, right? Or I'm sorry, this is what I do with buyers. I tell buyers, look, I'm asking for 500 a month, but you tell me what you can do because I want to set you up for success. I don't want to have to hire an attorney, 1 year down the road, 6 months down the road to try and repossess the property. I'd rather let's just get it right from the jump, right? Let's get it right from now. So if you can't do 500, what can you do? Is it 400? Is it 300? And if you say, well, I can only do $50, I might just say, well, I can't do that, right? So this is probably not going to be a good deal for us. We can't work on this one, but I'll hit you up if I get one where I'm willing to go that low. So it needs to be open and clear conversation because look, as the buyer, you don't want to give a $5,000 down payment for a property, pay $200 a month, and then come down, 24 months later, you can't pay. You're like you're dying to meet this monthly payment, you can't make it, and you lose the property. That's worst case scenario. All right, so here are things that buyers need to know. So, financial preparedness is essential. Okay, so you want to make sure you have stable income and that you can manage your budget effectively. You don't want to miss payments. Okay, depending on how the contract is worded, you miss 30 days, you miss your first payment, you get a letter. You miss again, you get you get a letter from an attorney, and then it just continues to escalate until the repossession happens. So you want to avoid these things at all costs. I'd always thoroughly read and understand the contract and seek legal advice if necessary. Look, these contracts, purchase agreement, rental agreements, seller financing agreements, land contracts, they all have super complicated contract language in them, you know, very hard to understand. It's not like regular English. It's not simple English. This is all language that has evolved over the years through litigation and through people bringing cases into court and so on and so on. So Hire an attorney to read these agreements. Make sure you understand what you're getting involved in. Make sure you understand your obligations and also the obligations of the seller, right? Because the seller will probably be aware, right? They may hire an attorney and be aware of your obligations. You want to be aware of their obligations. So if anyone is not performing, we can all hold each other accountable. That's super important. Um, you want to get the home inspected because you want to make sure that there are no major issues. Seller financing deals are different from lease agreements or rent to own agreements. Seller financing deal, when that line, you've paid your down payment, you've signed on the dotted line, that property's yours now. You're paying the taxes, you're making repairs, you're doing everything that needs to be done for that property. It's your responsibility. And so if you're buying a house, you're going to want to get it inspected, see if the roof's good, foundation's good, the plumbing's good. You're going to want to check these things out because once you've taken ownership, it's on you to fix it. Common pitfalls to avoid. Do not skip on the legal advice. Again, hire an attorney. It might charge you $100, $200 to have a conversation, right? Real estate attorneys are expensive. All attorneys are expensive. You pay for the consultation, have them read the contract. They'll explain to you, what the contract entails, what your obligations are in the contract. They may help you in the negotiation process and make recommendations. So I would say hire an attorney to read over the contract just to make sure you're comfortable with it. Avoid ignoring the fine print. So make sure you understand all the terms and conditions and be realistic about your financial readiness. Okay. So if you're getting into a deal and the guy's not checking, the seller's not gonna be checking your employment, they're not gonna be checking your credit worthiness, they're taking your word for it. You need to be an adult, right? And you need to really look at your situation and say, hey, I could afford this, or hey, I can't afford it, right? So you need to make that determination. You need to take that ownership. All right, and look, in just to recap, seller financing can be a great opportunity. I know I talked a lot. There's a lot good. There's a lot bad. There's a lot of ownership you need to take. When you're dealing with a bank, you don't have ownership. They don't take your word, right? You're not responsible. They're going to take that responsibility from you in the form of, hey, I need 6 paychecks. I need to see your bank statement. I need to see, I need your social. I need this. I need that. They're going to ask for everything because they're not going to take your word. So there's a lot that we talked about today. Seller financing can be a great deal, right? You can get into a property. Nobody's checking your credit report. You don't even need a social security number, right? Because you don't have to be a legal resident in the United States. No, I'm just saying anybody can buy these things. What I'm saying, right? Anybody can get into this. So it's a great deal. If you have an opportunity to do seller financing deal, really consider it because they're rare and they keep becoming less and less frequent because, banks want to lend you money. They just want to tap you out. This is a good alternative. Okay. If you have any questions, like always, if you have any questions about any of the things we talked about today, if you want further clarification, if you want, my opinion, please feel free to reach out to us, palmettolandbuyers.com, palmettohousebuyers.com. We buy real estate in South Carolina. And we fix and flip. We've got rentals. We've got Airbnbs. We try to do a little bit of everything. We're kind of generalists. But please go to the website. You can contact us through there. If you found this video helpful, please like it, share it, and subscribe. and I'll be doing more videos for real estate tips. Thanks.